Oracle stock rises after Trump signs executive order on TikTok. So I'm not sure if any of you have heard about what's going on with the whole TikTok situation. I believe it was January when they started. They were going to ban TikTok because it was owned by China. Then they put a 90-day stay on it till April. Then I believe they put another 90-day stay on it. After all of that's been said and done, here we are. US is about to possibly purchase TikTok. So let's see what's going on. Oracle seems to be a big lead on that. So Oracle shares are moving higher in extended trading on Thursday after President Trump signed an executive order to approve a deal to keep TikTok available in the US. What to know? So Trump has officially signed an executive order to keep TikTok alive in the US, according to CNBC. Chinese President Xi signed off on the deal after initially pushing back. The executive order comes after the U.S. government raised national security concerns about TikTok and forced parent company ByteDance to sell it to U.S. operations or face a ban. The report indicates that Oracle will be in charge of TikTok's U.S. security option. So that's good to know, guys. Now, even if you don't use TikTok, we have to understand that these social media platforms play such a huge and crucial role in not the economy itself, but how people, everyday people, perceive the economy and perceive how things are going. So if there was a ban on TikTok or there was a big issue going on, well, things might get a little skeptical. But now that Oracle's stepping in, maybe Oracle provides some support. Thank you, producer. You're a GOAT, best producer in the game. The company will also provide cloud computing services for TikTok. So they're not only going to be in charge of it, but they're going to be providing the cloud computing services as well. Trump said at the signing of Oracle chairman Larry Ellison, is playing a very big part in the deal, which also includes Rupert Murdoch and Dell Companies, right? Which is Dell CEO Michael Dell. It's funny. Dell shares are up about 0.75% in the after hours last time we checked, so it's not the biggest move. 0.75% isn't something like we saw when Nvidia announced $5 billion towards Intel, and Intel jumped 30%. So we got to be careful with that, right? Not the biggest move, probably not something that's going to have momentum, this Dell trade right there. But this is on Oracle, so I do want to take a look and see how Oracle is responding to that. So here we're taking a look at Oracle. We see year to date, here's 2025, the start. So we could take our measurement tool and see that at some point from our highs, we were up over 107% on Oracle. That is crazy. Now we are up only about 75%. So we would like to see a possible pullback. Now at this point, we had this gap here. We had earnings on Oracle, and it was a double miss. However, we have to know that when earnings come out, it's not just the earnings report, but a lot of times they host an earnings call. And on these earnings calls, the CEO or somebody higher up will come on and say, hey, we're going to do A, B, and C going forward. They give you a little bit of a roadmap or a projection of where the company's headed. If it's strong and investors have a lot of confidence in it, well, then it's going to give us a good reaction like this. If it's not, then we'll have to be short. So something I like to do when I see a massive gap like this on a stock is I'll mark out that gap. So we'll go from the gap low, which is the previous day's low before we gapped, to the low of that next day. So now this would be our gap zone. Now, a lot of traders see a gap and they go, oh, as soon as I enter it, I'm going to take a short position because I want to see us take a short and go fill that gap. Stop loss near the high, and I want to see us fill the gap. In my opinion, when we get gaps like this, these areas tend to work more as support. And the reason for that is because these areas did not give price and volume the opportunity to fill. So when price gapped from 241 to all the way 312, nobody was able to buy at 250, 260, 270, 280. So anybody who had passive orders sitting there to go long at those levels, those orders are still active. So when price starts selling into them, they're going to find support and find buying pressure. So I would be careful on trying to trade a gap fill strategy like this, especially because we're in more of a bull market right now. If we were in a bear market and it seemed pretty obvious that we have selling pressure, and if volume was picking up as well, that would be another thing, but it's really not. Well, then sure, go for the short. Gap fill would be great. But at this point on Oracle, I'm really thinking it wants to try to hold some support between 250 to honestly, it's a big zone, 250 to 290. So a real tough short position there. And again, that's mainly because of how strong markets have been. So this is the daily chart. We could take a look at the 4-hour or even the 2-hour. Now, something I do like to do, guys, when I'm charting out a stock like Oracle, Apple, anything that doesn't trade overnight, is I like to turn off our extended trading hours because I want to see what's going on during the New York session. How is volume being traded when volume is actually in the market, right? And that gives you great key levels. We see right here. Look how great of a key level this worked out on Friday the 12th, worked as a key level again on Thursday the next week, again that Thursday evening, and now here we are, we're trading on it. If this is an area that if we could remain below, we could see if it could hold as resistance, right? So something I would look for is we create these lower highs, and then start to create some lower lows. But we'd really need a break below to use that as resistance to go lower. And that would be a trade plan on Oracle. But at this point, with this small break below, this could be our liquidity sweep before we end up having our move and continuation. Remember, trend is our friend. And right now on Oracle, if we're looking at our trend, it has been bullish overall. If we're looking more at a recent trend, it has been consolidating. So it is a bit of a tough point.